Hello guys, today we try to see something about day trading, which is what we call the time frame. Now, what you see now here, all these candlesticks that you see, as this one for example for today, which is Thursday 31st of May, you can see all these that are green and red are candlesticks, and each one is forming a day. Okay, now if you are a day trader and you want to day trade, the most important thing for you is to know about the day, not the days as swing trading. For example, if you are doing, for example, short-term trading, okay, you are looking let's say here you are looking for the trend. Okay, a trend, it means let's say the succession of green and red candlesticks until it forms what we call a trend. Okay, but if you are doing day trading, is it important to know this all these days? No. Okay, so you can just begin with a day and then we see. Now, in order to give you an idea, when we are going to do day trade, you click this on the daily, you choose a time frame that you like. Now, what's the difference between, for example, when you put 1 minute, this is 1 minute, okay, this is the beginning of the day here, 1 minute, which is 9:31 a.m. in the morning. Okay, now 1 minute, it could be very small, and most of the time those who use 1 minute, it means they are looking for small trends. Okay, small trends, and then they can exit. For example, you can see here there is a trend here, 1 2 3 4 5 6, about 6 minutes, and the trend stops going up and it goes down. Okay, there is another trend here, okay, 5 or 6 minutes. There is another one here which is longer, which goes from, let's say here, 10:52 to 11:50. It means 1 hour. This is 1 hour 1 minute. It means you should stay in this trade 1 hour according to what I see, and then you can make money. Now, whatever, let's say you change to 5 minutes. Now 5 minutes for you becomes easier, as you can see. Okay, for me, most of the time I like, if I want to trade, I do 5 minutes, because see, 5 minutes, 10 minutes, this is a good trade. Now it begins with 187, it goes to 189. Okay, so here we have one which is better, from 10:55 to 11:50. Okay, so it is 55 minutes. But you can see that when you see with 5 minutes, it is better than to use the 1 minute. But this is according to each person. And then as you can see, at the end of the day, the high, there is nothing. Now I will give you now something very important to see always. Okay, what is this thing that makes you in the future a good day trader? The thing is, you should try to make the line of the open. So let's say here the open is 187.87. Okay, so let it be with blue. So this is the beginning of the day. You put 5 minutes and you just wait. Now here just at the beginning, you see that the first 5 minutes the stock has gone just a little bit down, and then it continues to go up. When it goes above this, what we call the open, or what I call resistance line, let's say it is the resistance line. Okay, so this is the open or the resistance line. If the day goes above the open, it means that the day is positive day, and then you go long. If the day goes down, okay, it means that the day should be going down, and then you can short the stock. Okay, so this line, when you put it and you wait just few minutes at the beginning, you will get all the information you need to decide for the day. If it is going up, because whenever it goes up 5 minutes, 10 minutes, it's going $1, $1.50, and it's going up. Understand that the stock goes $4.11. Now, $4, you will not get $4.11 except when you buy, you see it's going at above the open, and you leave it for the end of the day. You can do that also, okay? But those are for more like professional people who are into the market for a long time. It means they don't care. What they care about is to see that, since they don't know where the stock will stop, so the thing is they will just continue to hold until the end of the day, or whenever you can make money. Because see here, if you go here until here 187, you go, let's say here 189, okay, you are just getting 87, 89, so you are getting about $2. Now if it is $2, you are getting $200 in this trade if you stop here. But understand that the trend in the day here, it continues going up. Now let's give you another example with stock that goes down. Apple. Let's see. Let's see when it begins. Okay. Yes. This is the open here. The open is 187.20. $187.20. So this is the open. Now, this is the open here. As you can see, I can make a line in order to see it. So the stock has been going up, then go down, and then it goes up again a little bit. It reached 187.35, and here it opens at 187.20. It means it doesn't go that much up, then it goes down, then it goes up, then it goes down, then it goes down, then it goes up, then it goes down. So try to see here, Apple is very, very volatile. That's why it goes only 63 cents. But understand that it has gone up, then down, then it has gone up, then down. So it is a lot of directions in the same day. Okay, if you can see, 1 direction, 2 direction, 3 direction, 4, 5, 6, 7, 8. So it is very, very difficult to trade like this. So this is stock like this. It's not a good example of trading. Now, this is just to show you that it's not easy just with this line, which is called the open, which I put as a resistance line. You see that the stock has been going up, crossing up and down this open until to have 63 cents down. So those who traded this, they can't make that much money. Even here, it goes from 86 to 87, $1.30 or so. So it's not that big deal. So now the main thing is to show the first 5 minutes where it goes, and then you continue with the trade until the end of the day. Now, this line here, it shows you if you are above, it means if the stock is going to make money up, or if it makes money down. So it's very good to apply these two lines. It's like a graph, okay, to understand where the thing is. And if you stick with few trades, with few stocks, and you understand how do they move, it's better, because this as you can see, sometimes they do very good. Like, see here, if I showed you the 25th here, the stock 188.27, it goes up to 189.31. So you see all these 5 minutes going so good. Now try to see, for example, 29, okay, 29, there is I think it's a bit a gap down, and then you see this trend that I showed you here. See the beginning of the stock, it is so good. Now another one here, just to show you that sometimes the day, when you just put the open, you can get some money just by knowing where the stock is. But it doesn't continue the same because it has been going down, up and down, up and down, up and down. It's just because Apple is very volatile. Now, let's say if we take Twitter, okay, Twitter, as you can see, we have some good things, for example, in 29. So this is the open, which is 33.39, but you can see, okay, here the trend is going so good in the beginning, and then it goes down to 15 minutes, and then it continues to go up until here. So from the beginning, you can make money always. It means when there is a trend up, here trend up, here trend up, here trend up, and sometimes the day is so bad that you can make no money from this kind of stocks. So you should change, and it depends where you are in the market. And the main thing is in day trading, like in swing trading, you should continue to trade and practice a lot. When you begin to practice a lot, you begin to see things. Okay, there is no one rule to trade, so there are many rules to trade. So the main thing is to practice, especially from the beginning of the day, because almost all the action happens in the beginning of the day. Okay, so thank you very much. If you have more questions, please ask, and you can write to me an email, and the email is in the description. Thank you very much, and have a nice day.